founder of the Mortgage Calculator. We are a lender that specializes in non-QM and non-traditional mortgages, as well as all the conventional FHA, VA, and USDA products. So I'd like to thank everybody for joining us today. We also have our sales manager, Jose Gonzalez, and our COO, Kyle Hiersche, who will go over a little bit later about some of the details about what we specialize in. But first, for today's show, we just always want to check out the rates in the marketplace. So we have built a quick tool. I'm going to go ahead and share my screen here where we can quickly price our deal. So this is a tool for mortgage professionals, obviously just to get quick pricing. Now, if you need to get a full quote, please talk to one of our licensed loan officers in your area, and they'll be happy to send you a quick quote and go through the qualifications with you as well. But in order to just check out the marketplace every day, we want to do this show and be very transparent and show what's going on in the market every day and talk a little bit about it. So for our demo scenario, I'm going to go ahead and set up a basic quote for a $500,000 loan amount at an 80 LTV for a conforming, which means conventional purchase, and a 30-year fixed regular loan, typical what everybody's used to, primary home, a regular single family. And for example purposes, we're going to use our state and county where our office is based here in Miami. And for example purposes, we're going to put an example 760 credit, an example debt to income ratio of 40, and of course United States citizen will be set here for example purposes. So let's go ahead and use our quick tool here to just check out what rates we have available this morning. And as you guys can see, this is actually live, so we have a little security check here. Let's see if we can get through it. And we'll see some of our conventional programs. So our Fannie Mae Home Ready program is a specialty program, usually for first-time buyers and people under area median income. So please talk to a loan officer for these specialty programs, the Home Possible and Home Ready. But if we scroll down a little bit, we'll see our regular 30-year fixed. And it looks like right here, conforming 30-year fixed, looks like as of today, if you speak with one of our loan officers, we can offer a 6.875 rate at a par rate or no cost, no discount point rate. Of course, you could go lower on the rate if you want to buy it down. There are also temporary buy down options as well, which are very popular these days with the little bit of a higher rate environment that we have. But again, this is just what's available today as our banks and partners have just released their rates for this morning. So let's go through and check out a few other examples as well. So under our quick pricer, we'll go ahead and set up a similar scenario. But instead of conforming, we'll go ahead and pick FHA, which is a very popular program. We'll lower the loan amount a little so we don't hit the FHA limits. It has a little bit different limits than conventional. And we'll keep everything else the same. Purchase, fixed rate, 30 years, primary, single family, Miami-Dade, 760 FICO, and an estimated 40 DTI, debt to income ratio. Remember, FHA options are for borrowers who typically have a higher debt to income because it has a higher qualification level that people can qualify under than conventional. So typically we would see higher debt to income here, but for example purposes, we'll keep these the same. Another reason people use FHA a lot of times is if they're getting their first home and they need to purchase a multi-unit. FHA still allows low down payments for multi-units. So it's very popular with some of our people trying to get into their first home. Now we can see here at the top of our list here, our closest to par rate. A little bit of cost here, but it's relatively the best deal. That's what our system does. It's going to pop out our best closest to par rate at the top of the list. So it looks like the rate today is 6.125 with a slight cost for FHA. And remember with FHA, there are some fees for these programs. So you always want to look at the APR for FHA is a little bit higher because of some of the funding fees and whatnot, upfront mortgage insurance premiums that come with the FHA program. Now let's go ahead and compare some of the other options. So for borrowers who may qualify for VA, our armed forces borrowers who have a certificate of eligibility from the VA program. VA loans are a great option for those borrowers who we appreciate for serving our country, and they have great options for loans here that are supported by the VA. So if we do everything else staying the same, we just switch it to VA for a standard purchase. Let's check out the options we have this morning for VA. And top partner here with the best combination. Looks like a 6.125 rate, relatively the same as FHA, which is still great. And there are a slight cost here at this rate, but it's the best deal, the best bang for the buck. Notice the APR is a little bit lower on VA because VA has less fees for our veteran borrowers than the FHA program. So if you do qualify for VA, please speak with one of our loan officers. These programs are great. VA even goes up to 100 LTV, where our borrowers that qualify do not have to actually come with a down payment even. So VA is great if you do qualify. Please speak with one of our team members. And the last option that's also great government program is the USDA program. So again, we'll pull up at 80 LTV, make sure we don't hit any loan limits there, and everything else will stay the same. Remember, USDA is a government program for rural properties. So there probably aren't many qualified, if any, in Miami-Dade County. But if you do get into some rural areas of Florida, obviously you'll have to check if that property qualifies, and then you can see if you qualify for that program. We'll keep everything else the same though, just to see what the USDA programs are offering as of this morning. And our partners with USDA are offering right now our par rate, or closest to par, is a 6.25 rate for no cost par rate, right? No points. And remember the APR, there are a little bit more fees. There is a annual mortgage insurance fee for USDA. So you see the APR does increase a little bit there. So always good to compare APRs when you're comparing quotes. Now let's go back to what we specialize in here. So at the Mortgage Calculator, all of our team members, all of our loan officers really specialize in non-traditional mortgages. So when we're here on our pricer, let's go ahead and pull everything else the same. And we're going to do expanded guidelines. So this is what we call non-QM, non-traditional mortgages. These are where our partners, our banks, our outlets are going to offer our customers pretty standard mortgage loans. They're going to be still 30-year fixed loans is what we're going to compare here, but they're going to qualify with alternative income. So everything else staying the same, instead of doing a full doc, which means what you're used to on conventional loans, full tax returns, full W-2s, we can actually use the expanded guidelines programs to offer alternative income documentation. So our most popular here for our self-employed borrowers that we work with, realtors, loan officers in our industry, but also there's a ton of people in the gig economy these days. So we can use their bank statements to then determine a debt to income ratio for this program. Now remember, they must be self-employed, so we need to check that box. But let's check out the non-traditional programs we have for borrowers purchasing a primary home who may not qualify for any of the conventional programs we just went over. So obviously these rates are going to be higher. These are different programs. These are every bank and every outlet is going to have their own specific guidelines. So please get with one of our loan officers so we can navigate you through all these various programs. But you can see here there are some for about 8%, but that's a very large cost. Probably wouldn't recommend that one. This one has an 8.125 for relatively normal cost. And here's an 8.125 for no cost. So you see there's a lot of variation within our partners, and we just have a ton of these programs available, all the way from 8 all the way up to 10, and some even higher than that. Just depends on which ones you qualify for. So these non-traditional programs, not only can we use bank statements, we can also qualify borrowers who maybe have a credit event like a foreclosure or a bankruptcy, and we can qualify them within 1 or 2 years compared to conventional where we cannot qualify them. So these are great options. Let's go back and go over one other option we typically see for primary borrowers who want to use expanded guidelines. So even those borrowers who maybe are in between jobs or maybe don't have a regular source of income at this very moment, we can even use what we call our asset-related programs. So these are very popular as well, where if you have a large asset, say a retirement account with $1 million or a large account, you can then deduce a debt to income based on the borrower yourselves executing that asset account and withdrawing it to pay the mortgage payment. So as long as you can deplete that asset over time and deduce a income amount that would have to be used from it, we can then qualify a debt to income ratio based on that. So this is a great option for people who may be even in between employment. So let's see what those programs look like. And let's slide this up to 80 so we have everything the same. And we will see these are pretty much similar, right? A little bit higher rates than bank statements. Bank statements are a little bit easier to prove income. So these asset programs, it looks like, are in between 8.125 and a little bit higher. Our closest to par rate is going to be 8.5 here on this program. So a no cost par rate for 8.5% is a great option for someone who would not qualify otherwise for these programs. So we love to work with these borrowers who don't qualify traditional. That's what we specialize in. And there are a whole bunch of options, as you can see here. We won't go through all of them, but there are other options as well. Within here, 1-year documentation, all kinds of great options for us. What we want to also compare here on our show every day is make sure we look at the investment programs. We love to work with investors. So what I'd like to do here is pull up an investment purchase, and we'll compare conventional investments, which would be a traditional 30-year fix still going to be a single family in Miami-Dade, still going to use a debt to income because this is going to be a conventional full doc loan. And there are no such thing as prepayment penalties on conventional loans, so we won't have that. When we go into our expanded guidelines, we will utilize this feature. So for now, let's check out the investment pricing for a standard 30-year fix for an investment property, which obviously Fannie Mae, Freddie Mac, these are the large government-sponsored entities that are insuring these loans. They have fees, right? So our rates here are still lower, but there are a lot of fees. So Fannie Mae charges a large loan level price adjustment for investment properties. So that's where we see the large amount of fees here. There really isn't a quote unquote par rate here with no cost because the Fannie Mae and Freddie Mac both have large fees for investment properties. So it looks like the best combination that the computer's identified is a 6875 for a 3.25 in discount points, which is pretty spendy. Obviously, you might want to go a little bit higher to reduce those discount points. But these are great options for borrowers who can qualify for conforming conventional loans. Now, we have a lot of borrowers who still love to invest in real estate and purchase investment properties and want to use alternative documentation. So a lot of our borrowers are self-employed or still in the gig economy, but still want to invest in investment properties. So in this case, if we do an investment property under expanded guidelines, we're going to use, let's say, business bank statements for 12 months, and we're going to add a prepayment penalty. Whenever we're doing expanded guidelines and an investment property, we typically add a prepayment penalty as pretty standard in the non-QM world. So for this pricing example, we will add a 3-year prepayment penalty to help offset some of those costs. And let's see what our partners are offering. Oops. Got to mark self-employed. Let me do that again. And go to 80 LTV exactly, 3-year prepayment, and I mark self-employed. So as you can see, this is a real pricer that's really getting pricing as we speak and actually requesting the pricing right this morning. So we see here on our investment purchase for our par rate, our no-cost rate, we have a 9.25%, which is a great option using business bank statements to purchase an investment property. And you can even buy that rate down, obviously lower into the 8s if you want to have some discount points. But these are great options for us. You see we have a plethora of programs available in this non-QM space. Now, our investors that don't have income, traditional income, or even bank statement income, we still have options for those investors. So we have a lot of, like fix and flip investors and people that are really in the real estate investment world who maybe don't have a traditional employment of any kind, right? So in this case, we're going to go under expanded purchase, 30-year fixed, and we're going to go under our most popular program here, which is instead of using a debt to income, we're actually going to use investor DSCR. So this is a commercial investment loan product that determines, doesn't use a debt to income, it determines the ability to repay the loan by the rental income from the property. So this is typically what was available for commercial investors, but now these are available for anybody investing in residential real estate. And these are our most popular programs at the moment because it requires no income verification and no employment verification. We simply determine that the rent from the property will cover the payments. So let's go ahead and check out these programs, which are most popular right now. And you see there's a plethora of programs here, dozens and dozens of programs that we have available. So definitely get with one of our loan officers to navigate these. But these programs are great. You see the rates are still about the same as all of our other non-QM programs for a par rate, relatively no cost. And you can even buy it down into the 8s as well if you'd like to have a slight amount of fees there. So a lot of variation within the programs. DSCR needs to be calculated. Please get with one of our loan officers to see which ones of these will fit your scenario. But these are all great because you can purchase investment properties without having to provide employment or income information. So these are our most popular programs at this time. Now, there are a lot of other programs available, so please get with some of our loan officers if you have any questions or want to get your own quote. They can pull these quotes up, send them to you in a few minutes, and obviously get more details about your specific situation. Let's go ahead and move on. Let's have Jose just talk a little bit about how we specialize in the non-QM and how that really helps our borrowers who don't otherwise qualify Jose. So maybe you could talk a little bit more about the bank statements and all that kind of stuff that really help us get people into homes who may not otherwise qualify.
Awesome. What I wanted to state a minute was regarding the rates a little bit of volatility. You all have heard in the last couple of days, Bank of Japan hit the global securities market with a curveball in changing the cap on the amount that they can change to 0.5% up or down from zero. So for the last couple of days, that's had a lot of volatility. The 10-year went up 15, almost 20 basis points. The good news is that the DSCR rates and the non-QM rates really have not been affected by that volatility. I just am locking in a file now that I disclosed 3 weeks ago, and it's the same cost, which basically substantiates what we've been talking about, that the liquidity in the non-QM secondary is increasing. So the end result is lower rates. And now going a little bit into guidelines, absolutely, the bank statement and the non-QM, especially the bank statement product, has really taken off from the beginning of the year when the rates started inching up in the conforming conventional agency business. A lot of those borrowers that were self-employed, the ones that have that choice to go to the bank statement option, since you do have to be self-employed for that option, have transitioned over to bank statement profit and loss option if it's primary, and also DSCR options as well as bank statement and P&L for their investment property. So that business that was quote unquote lost from the agency business isn't lost business. It's just transitioned over to non-QM. And luckily we were well positioned to just scoop it up, because that falls right into our business plan and in the extensive training that we provide to our MLOs to properly be able to consult their borrowers on bank statement loans and profit and loss loans and DSCR loans for their investment properties. And for those wishing to close in an LLC, obviously non-QM is also the way to go. So a lot of opportunities. And I just sent out some quotes yesterday on a 75%. I get goosebumps thinking about this. 75% loan to value purchase DSER 2-unit property, 7.375% he could buy it down to. 7.375% DSER, 30-year amortization, 75% LTV purchase duplex. That's unreal. Fannie can't touch that. They can't touch that. And here we are throwing out that kind of an amazing rate. So they have nothing to do but get excited and accept it when they're clunking around. All these people, all they know is conforming, and they're saying, no, I'm sorry, I can't do this loan because it's out of compliance, because it's like 3.875% cost. I can't offer that to you. And here we are offering 7.375 on that untouchable loan. And I think it was like maybe 2% loan discount at most. So amazing. So that's all I got to say there. Throw the mic down.
Mic drop. Okay, so just to wrap this up, thank you, Nick and Jose, for going over the rates. So just to wrap it up, again, amazing opportunities, right? Both for people looking for a primary residence. We also even have abilities to do loans for the more crypto based people as well. So a lot of non-QM products, whether you're getting a primary residence or the investor DSCR, which we really specialize in, and just being able to get a property, an investment property, for pretty much just the down payment, right? No income verification, no job verification. We're just going based off what the appraisal of the property says that it will rent for, right? And if that it covers that, then you're good to go. So tons of opportunity. Just want to mention the website is actually right here, themortgagecalculator.com. We have over 340 loan officers all around the country that are able to do loans in most of the states. And you can reach out to us. And again, I just want to stress that here, our loan officers take it a step further. Jose just addressed it, right? A lot of loan officers or companies may say, hey, we're out of gas here. We can't do this because of X, Y, Z. But our loan officers are trained to go above and beyond that and be able to find these programs that we have and consult the borrowers to be able to get into some of these programs. So we don't just do Fannie, Freddie, FHA, VA. Of course we do that, but we take it even a step further with all these non-QM products, and our loan officers all across the country have the ability to help borrowers with that. So with that being said, you could send us an email, info@themortgagecalculator.com, or just visit themortgagecalculator.com. You can see all of our different programs on there, and you can apply right there on the website, and we will connect you with one of our loan officers that can help you.
See if we have any questions today.
No questions, just a couple comments. So we appreciate everybody tuning in. Thank you so much. We will be right back here tomorrow. We do this on a daily basis, and so you can tune in and check it out.
All right.
So,
Thanks, guys.
thank you, everybody.